Okay, I record this video on Wednesday, the 14th of April 2021, just coming up to 6:15 p.m. Chicago time. Do hope you are doing well. So, midweek chart review. Going to go through the same charts that I did 2 weeks ago. Quite enjoyed kind of ripping through those charts. All of them were tip bar charts. Almost all of today's charts are going to be tip bar charts. So we'll kind of go through those. But before doing that, just to say, the last 10 days for me using my TradeStation has been extremely frustrating. I've been changing my tick bar settings on a bunch of my charts, and I think I have pushed TradeStation to the limit, certainly for my setup. The workaround that I've found is to up the resources that my Parallels emulator uses on my Mac. You might know I use TradeStation run through an emulator called Parallels on my Mac, Apple Mac, MacBook Pro machine. And what I've done this week is up the RAM to 16 gigabytes of RAM from, I think I was only using 4, and the processors from 2 to 4 out of 8 processors. That has made life a little bit better for me, but I'm also using some quite esoteric kind of tick bar settings, and I'm wondering if I'm just stressing the TradeStation data center too much because it's caused a lot of instability for me. So if you have followed me down this unfruitful path of changing tip bar settings and you've got instability on TradeStation 2, apologies for that. Let's see if those kind of changes to the settings make any difference. So let's get into the charts. The usual setup. I'm not going to bore everybody with the description of the indicators, but to say they are the better indicators on multiple time frames. Left-hand side, everything to do with volume. Right-hand side, everything to do with price. First chart I want to show you is Bitcoin, because Bitcoin, we reached $65,000 overnight and then had a little bit of trouble today, and I've kind of backed off a little bit. But this whole rally on the tip bar charts, an 8600 tip bar chart, set up back on the 25th of March with a classic kind of setup. Exhaustion selling, blue professional bars. We cross above the trailing indicator, trailing stop, based on the blue professional bars, into an uptrend, and better sine waves doing exactly the same thing. We break into strength with red bars here, having had exhaustion on the lowest intermediate time frame and a support on the highest time frame here. We get into a confirmed uptrend, and this has been a really nice trade. So we kind of temporarily stopped at about 60,000, kind of came off, blue professional bar stepped in on this retrace, and then we've continued on. But we have run into an exhaustion buy pattern, which kind of mirrors the exhaustion sell. So in my world, you know, all of the volume that was getting in here on this exhaustion sell is starting to get out on that pattern. We had a bearish divergence right by the zero line, which is we always wait for a little bit, you know, of a reading, a steeper reading, which we got with two flush patterns here, Rambo at 65, and we've kind of just come off a little bit. But blue professional bars here. It's not a classic in terms of blue professional bars right at the highs. They've kind of stepped in at this 62. But for me, what that means is this 61,278 level is absolutely key. If that gets broken to the downside, we're going to have some weakness. You know, we've got some weakness on price for the time being. We've overshot, you know, this pullback to end of trend on the highest time frame. We've got end of trends kind of going on here. So that would be a level to absolutely watch out. Let's see if they kind of push it up into this area and distribute above there, because the blue professional bars weren't getting out at those highs up here. But at this point here is critical for me. So it's a line in the sand to look at. I'm a hodler, so I'm still holding my Bitcoin, but on the next kind of move down, might be interested to buy another altcoin or leg into some more kind of Bitcoin. So just that's what I'm looking at on my chart for the next couple of days. E-mini. First of all, I want to show you this chart on the 135 minute because I've never seen a pattern like this. So not a tick bar chart, the 135 minute chart. 135 minute because there are exactly 3 135 minute bars in a day session of the E-mini. So it's a really handy kind of intraday chart to look at a high level. So certainly, you know, this whole move set up from, you know, the 3,300 level down here with an exhaustion sell. And this last leg that we had set up from exhaustion sell, blue professional bars here, testing in at 3,700 down here, bang. And we have not had a mirror image. We haven't had exhaustion buy. We haven't had blue professional bars on the way up or anything like that. But that's not the only kind of pattern that a market can turn around from. A market can turn around from a whole host of Rambo patterns, where it just means the new highs are being made by amateurs, light volume, small average trade size, and it's I don't want to say unstable, because I usually say unstable with Rambo patterns and an exhaustion pattern. This is just, we've just run out of steam at these highs with those Rambo patterns, so we could have some weakness. However, on the 135-minute chart, having broken into this confirmed uptrend, we're above resistance on the highest time frame. We've got to make pullback to end of trend on this highest time frame. So any weakness that we have is going to be caught by that support on the 135-minute chart. So if we do get it setting up, with today's activity, it had weakness in the second half of the day. Let's see what the next 2 days kind of holds. If we do kind of start to drop, the next place down would be that support on the 135-minute chart. But we've run out of steam with all these Rambo patterns. We had 8 in a row out of 9 bars here. That was Friday, Monday, Tuesday's kind of activity there. We had a similar pattern on the dollar index, although it's a tick bar chart here. Last time I talked about this, saying we were going to run out of steam on the dollar index. I've been surprised how strong the move has been in the opposite direction. I didn't know we'd go that far down on dollar index, but it's exactly the same thing that I was warning about. This was kind of 2 weeks ago. New highs being made by Rambo patterns is just a weak sign. We kind of wait for the professionals to kind of step in at some point. In terms of the tick bar chart for the Emini, I'm using a 5,000 tick bar chart at the moment. The 10,000 was just too much. My TradeStation couldn't cope with it. I was taking minutes to open, if not crashing my system. So kind of gone back down to a 5,000 tick bar chart. And you can see here, same thing. We're in a big uptrend on this chart. We've got to put in pullback to end of trend. We've had some weakness second half of today, and we'll continue that until we get support on the highest time frame kind of come in. But once that comes in, we'll put in a pullback to end of trend. So that'll be, for Thursday, Friday into Monday's kind of trade. Going to be really interested to see what happens after that. Let's see. We've got blue professional bars here at the moment. They weren't active on the highs necessarily here, but so the next place to look for a long trade was when this support kind of comes in, and then we'll see where that kind of tests back up. Could be interesting because we've started to rally in the 10-year bonds, and I kind of like looking for counter trend opportunities there when the equities are strong and the bonds are weak, and flipping the other kind of way. We had a nice setup with bonds 2 weeks ago. I was talking about this low being made, exhaustion, sell, bullish divergence, but I was looking for blue professional bars to kind of come in, and there they are on that retrace, on that test down there. Blue professional bars kind of step in. This exhaustion buying is short covering rally. All the shorts there just got pushed out kind of momentarily, and we very excitable, a lot of volume being bought up with those blue professional bars, kind of getting the move going there. I'm wondering, this is an exhaustion buy. This is, potentially getting us into a stronger move in 10-year bonds. So we've tested down there at the lows. It came up with a whole bunch of cyclical patterns coming together here. Pullback to end of trend, the low, intermediate, and a nice support in the highest time frame. So cyclically, it was a good place to kind of go long, and we had a little bit of a spike down to kind of clear out some stops at that point, and then we've rallied since. Come into Rambo patterns and kind of weakened from there, but no blue professional bars at that highs. And we're just sitting around this resistance on the highest time frame. So let's see. This could break into a strong uptrend on 10 years. We could have a counter move, strong downtrend on equities. But we'll just have to give it a day or two just to kind of confirm, just to see where this pattern kind of plays out on equities. So, like I said, on the dollar index, it surprised me how far this has gone the other way. But it's Rambo patterns that it reversed from, and we've got a similar mirroring pattern here with Rambo patterns kind of going the other way. So we've not turned around yet, and there's nothing on the other charts, the Japanese yen and the euro chart, to suggest that we're going to hold yet, and blue professional bars are going to get involved. But so I'm out of all of my Forex trades at the moment, just waiting for that next leg to kind of set up. On the Euro chart here, you see we bottomed. It wasn't a classic bottom. It wasn't exhaustion sell, wasn't blue professional bars down here, wasn't Rambo patterns and so on. And we kind of rallied the other way. Yes, cyclically, we were overdone and we got into a pattern here. But again, on the way up here, we got no blue professional bars, no amateur bars, no exhaustion patterns. So there's nothing kind of classic, to kind of take us the other way yet. So I'm just waiting on this. Japanese yen, a little bit better in terms of patterns. We had exhaustion sell, bullish divergence. We had blue professional bars coming down at that lows, and then a whole bunch of blue professional bars coming in here. Buying that breakout move. So Japanese yen for the time being is in an uptrend. Again, no exhaustion patterns, no blue professional bars up here. So wait and see. I don't think we've got a decent kind of signal yet on Forex trades. With Aussie dollar, we did have a partial signal here. So I was short Aussie dollar based on this retrace. This is an under the lip trade here, amateur bars testing back up and get wrong footed, goes the other way. Having had blue professional bars take profits, exhaustion buy and so on. On the way down here, I took off half my position because we had exhaustion, sell, bullish divergence and a blue professional bar kind of down here. But I did not do well in this activity here. I tried to kind of get short again based on that break, but it didn't work for me. So I'm out of the Aussie dollar, and it's actually kind of gone the other way quite strongly in the last couple of days. Blue professional bar kind of comes in, we break into above the trailing support on Better Pro-Am, and we've got all kinds of strength going on cyclically. So, I don't know, out of my Forex trades, waiting for some blue professional bars to give me a good entry, either a re-entry into one of these kind of trending Forex pairs or a reversal kind of setup. So we'll kind of wait and see. Gold. Now, gold, I've been saying on the daily chart, been waiting for the blue professional bars to step in because they've been nowhere forever. And we had a heck of a rally here. What was that, $80 from 1680 to 1760, kind of up here. Not with professional support, and that's why I don't like this. I think it's kind of weak. It was based on Rambo patterns down here. We had exhaustion sell and Rambo patterns. That's an unstable pattern, and we've rallied from there. I mean, I think it's surprised people how far we've rallied, but we have rallied back into an area where there's a whole bunch of blue professional bars here. And this kind of sequence that we got below the lows of. And on Better Sine Wave, we had a triple a couple of bars ago here where we had resistance on all three time frames, bang, bang, bang. And we're hitting just a support here on the daily, on this lowest time frame. We're weak, we're under resistance, and we're at an area where the blue professional bars historically have kind of gotten short. So let's wait and see. A strong move through 1730 would show that we're going to go test those lows. But we've not got a reversal in the gold trade until we see those blue professional bars. So again, waiting for blue professional bars. Silver is a little bit stronger. Again, blue professional bars didn't step in at the lows. They stepped in here. Exhaustion, sell, bullish divergence, they weren't here. But we got a family of them happening kind of right here at these highs. And it's strong at the moment. We've got all these red bars showing strength on Better Sine Wave, and we're just sitting at resistance. I don't know. Could be a gathering pattern. Silver and gold could trade differently, and we could go for a rally in silver. So let's see. If we break back above 25.60 here, that would get us going into a trending move. We certainly had our exhaustion sell patterns down here. Maybe we have to go see that with silver. So silver for me is looking more interesting than gold. Crude. Now, I said on crude that the uptrend was not over after we had that pretty nasty weakness over the course of 3 or 4 days because we hadn't seen on the daily charts pull back to end of trend. But what do we had a classic setup here in crude. Exhaustion sell, bullish divergence, blue professional bars coming at the lows. We test again with a whole bunch of blue professional bars. Look at all this strength going on with confirmed uptrends, and then we have a classic stair-step entry point. The market kind of comes off a little bit from that local high. Blue professional bars step in. It's really quick. You get confirmation straight away. They don't fuss around, bang, and kind of trades up. Now, we've traded up into blue professional bars at this point, and we're above resistance on these 2 time frames. We'll have to kind of wait and see. They could be temporarily just taking profits. It's been a nice move from 58 to 63. So just wait and see. But yeah, we haven't put in pullback to end of trends or exhaustion buying or anything like that. That's exhaustion buying getting the move going. We're in this channel. That's getting the move going. It's not at a high or making new lows like that. So we're still in an uptrend with crude. What we're waiting for is a good kind of re-entry point there. But natural gas, I was talking about looking for an entry on that. I'm long natural gas now. So exhaustion sell, bullish divergence, blue professional bars kind of come in here. It's also pullback to end of trend on the highest time frame here, confirmed uptrend. The red background means confirmed uptrend when we've got the price signals and the volume signals all kind of working together. So that's kind of good. So I'm waiting for this to kind of play out. We've got a pullback support kind of going on at the moment. But until we see exhaustion buy, blue professional bars on the way up, I don't think it's over. We're having a little bit of trouble at the moment just getting through this kind of previous area of resistance. Up here we've got cyclical resistance on the highest time frame, but we're in an uptrend here because we're above resistance on the the low and the intermediate kind of time frame. So let's see where that one goes. Copper, not really much to say on copper. Exhaustion sold, blue professional bars kind of stepping at the lows. When we come back to test, we're in again, exhaustion sell, blue professional bars, another exhaustion sell, more blue professional bars. I mean, it's taken, what is that, almost a month and a half to kind of bottom that pattern. Each time these breakout moves being led by the amateurs, wrong-footed, wrong-footed, wrong-footed. So these blue professional bars could actually be getting us going as a little bit of a gathering pattern to get through 415 and break this thing into a serious trending move, because you can see it's been flat in this sequence for the whole month. All right, so there we go. That's all the tick bar charts that I want to roll through. Apologies if that was too quick for you. If you're an old hand at the indicators, it should be fairly clean, I hope. But for new hands, I do appreciate that I talk quickly and I rip through too many charts way too quickly. So this is just a sneak peek of what I'm going to be releasing to subscribers in the next week, hopefully, once we get it all kind of coded and added to the installers of the Better indicators. I've been looking for a way of getting everything on to one chart. My typical setup here with the volume-based indicators and the price-based indicator, the only way to combine all of that information is to have two charts kind of side by side. It's too difficult otherwise. But if I strip down these indicators to the absolute basics, what I need to trade and show signals, it would be the exhaustion signals with bearish divergence and flush signals on the price bars themselves. That would be number one. Number two would be looking at the professional activity, and the way I do that is using the Pro-Am trailing stop as a way of representing where the blue professional bars kind of come in. Because what I'm looking for is areas where we have a change, we have a stair step like this in the Pro-Am indicator. That's what I'm interested in there. And so I wouldn't look at Rambo patterns or amateur bars. I'd be really focusing on the professionals. And then for better sine wave, it would be looking at the trend indicator itself. Painting the bars kind of red and white is the most useful indicator of better sine wave. However, when you look at those three kind of side by side, you get a lot of, not false signals, but I'm missing a piece, a setup piece. And what I've found is that I can calculate using better sine wave. I always talk about the cyclical energy needs to play itself out until we get reversal moves. And there's a way of measuring that using better sine wave, which I'm going to be calling an overbought, oversold kind of version of better sine wave. Not to get too in the weeds, because I'll get into the weeds in another video, but I'm actually calculating that overbought, oversold calculation in 12 different time frames. So the traditional better indicators use 1, 3, and 9 as the trading time frames to look at. You can actually cycle through 1 to 12 in those time frames and measure the cyclical and trendy activity in each of those time frames. Once you look at that, once you get actually 11 of those 12 timeframes all in sync, you get a setup, an overbought, oversold kind of condition. But the trouble with overbought and oversold conditions is that they can last for quite a while. So you need a way of triggering an actual trade into them. So these background shadings that I've got on the chart here, red background is signaling oversold. So I'm looking to go long at that point. When these kind of pop up, I'm looking for a long trade. When the gray background pops out, we've got an overbought situation where all of the trending systems have gone to an extreme. Everything's in an uptrend. It's all 11 out of 12 time frames have shown an extreme here. We had a classic setup in Bitcoin, kind of that I was talking about on my charts earlier, and you can look at it all on one chart. As soon as we got an oversold condition, we're looking for a setup, and the setup is the two other indicators to kind of come together. We need exhaustion patterns and blue professional bars. Here's our exhaustion patterns, bullish divergence, flush, another exhaustion pattern. So we know volume is exhausted at that point. Down here, we've got the trailing stop. You can see was quite far away, wasn't close enough, but Better Pro-Am had blue professional bars kind of come in down here, and that's why the trailing stop kind of followed us in and flipped, and then we get red bars here. So what I'm looking for is that condition where all three things come together, and the result is an uptrend. So exhaustion, sell, cyclically oversold, blue professional bars have come in and we've gone above the blue professional bars, and the result is an uptrend. Have a little bit of weakness and then the uptrend continues. Now we had weakness from this next kind of setup. We were overbought at that point, but we didn't have the other conditions. We didn't have exhaustion buying and so on. It trailed the step up. We had some professional activity, but it wasn't enough to reverse the market. Now on this next move up on Bitcoin, we've got the same condition. We're kind of overbought, but now we have exhaustion buy, bearish divergence, flush patterns going on here. The stop has been trailed up, and that's why I'm saying this 61,000 level in Bitcoin is absolutely key. So all three conditions are starting to come together. We got weakness with white bars. We need to break that 61 to be confirmed on the way down. So that's an example of looking at Bitcoin for a setup. Here's coffee as another example, kind of down here. Exhaustion sell, bullish divergence. We've got oversold with these backgrounds printed as red, and we start to break above the blue professional bars. We test, and we're into an uptrend at that point. So that's the three indicators kind of coming together, and the result is an uptrend at that point. So that's coffee. Silver. Silver is why we're having this little rally in silver. We had exhaustion sell, bullish divergence come in. The trailing stop with Better Prime kind of comes in. We're oversold at that point, and then we're starting to have strength. And that's why silver is rallying at the moment. The top in silver here came with exhaustion by bearish divergence. Cyclically, we're overbought, and the trailing stop gets broken, and the result is a downtrend. This didn't have that sequence. This oversold indicator in the background didn't have the exhaustion patterns. Yep. We had some blue professional bars. Temporarily, we triggered some strength, but it didn't have all three conditions come together. I hope you can see why that and that are very similar, the mirror image, and why they lead to trend changes, whereas this does not. Then let me show you British pound. British pound's interesting at the moment. Exhaustion sell, bullish divergence, oversold condition, and the trailing stop that we need to get through 138.40 on the upside, and it needs to result in a break into an uptrend. So it's setting up potentially British pound for reversal trade, but as yet no blue professional bars have brought this close. So we've got two of the three conditions kind of coming together there, but not all three. E-mini, exhaustion buy, bearish divergence, flush patterns. You can see this whole sequence. This is the trouble with overbought and oversold conditions. They can last for quite a while, and that's why I'm looking for the confirmation of the other two non-correlated indicators to come together. As soon as we get a result, break into a downtrend, break below support, everything is kind of coming together at that point for a downtrend in the E-mini. So what I'm going to expect in 10-year bonds. So again, 10-year bonds, exhaustion sell, bullish divergence, cyclically oversold. The trending system on Better Pro-Am kind of trails. We know there's blue professional activity down here, and then we break into an uptrend at that point. So That's what we're going to be adding to the indicator suite in the next week or so. I'll do a little bit of a deeper dive into the indicator and show you how I'm using it, but it's allowing me now to look at everything, in one little screen. Always checking back to seeing my setups like this, but it allows me to cover 24 markets at the same time to see where these kind of setups are occurring, and it's using those 3 non-correlated indicators, but hopefully now in a way that is just more obvious and filtering out the in-between trades and really getting us into those trades where you're trading against an overbought and an oversold condition. All right, there we go. I've whittled on long enough. Thank you for listening.